the Securities and Exchange Board of India has issued a circular reinforcing the rules about short selling. Institutional investors are henceforth banned from indulging in intraday trading, and all short sales made by institutional investors need to be declared by the institutions on the outset. Now, this comes after the Supreme Court's verdict on the Hindenburg-Adani row, where the Supreme Court has reinforced the fact that reports from external research groups without any verification cannot be relied upon as proof. While these are not new rules, given that naked short selling has always been banned by SEBI and that institutions cannot trade intraday anyhow, the only major change concerning short selling is that institutions now mandatorily need to declare short sales. How will this affect the Indian markets going forward is the big question. Joining us at this point is Ankit Jain, senior economist. We also have Ajay Dua, senior economist, joining us live. Ajay Valimbe, economist, also joins the broadcast. Ankit Jain, let me begin with you first on your take on this new circular, this new regulation.
My take on this regulations, this is not new per se. It's just reinforcing what they've said and some clarifications being added. The only thing is they have added that more disclosure requirement from the retailers and the institutional sellers. And the institutional sellers cannot settle it by end of the day. They still need to borrow it. This will enhance what's happening in the global markets. As of now, we already have a lending system in India where you can lend securities and then sell it, but it is not being used properly. So I believe this could be a chance for a long-term investors to lend their shares to institutional investors to make some extra money. That will start happening. Short selling still happen by the way of futures and options already in India, the way it happens globally, but still naked short selling, which has been banned even in US today since 2007-8 crisis. Companies do take benefits out of it. So that change would happen. I don't see there is much change in the regulatory framework which has happened, apart from few disclosures which have been added that every retailer has to tell that at the end of the day, at the end of the trading hours, what is his short selling. The brokers have to submit that list. The institutional investors now need to do a gross short selling. So what earlier institutional investors, they can short sell in the morning and buy back before the afternoon. But now, even if they do that, they still need to give shares at the end of the day to the broker and take back those shares again. So you can't just do that. So that monitoring process will get enforced, which was not there earlier. There was no monitoring process by the institutional investors when they used to sell in the morning and buy back in the evening. So there was no framework to check whether they used to have the shares in the morning or not. Now they have to really show to their broker that they already have those shares either in their own capacity or they've already borrowed from somewhere. So I think borrowing mechanism will increase in India. Earlier, as of now, nobody's using that SVLM, which was a standby lending mechanism in India. Nobody's using that. So that will start, and which might give you extra buck for a long-term investors. That they can they can lend their shares for 45 days, 90 days, 180 days, and they can earn a small premium out of it. So this will make a market more mature, because this is need of the hour, you cannot ignore it.
Absolutely. Ajay Dua, let me bring you in here on what you believe the ramifications of this order will be, this new circular will be. Ajay Dua, can you hear me?
Yes, I can.
Okay, sir, I was trying to ask you on this order, the ramifications of it, what you believe they will be?
I seem to have again gone off.
Ajay Dua, can you hear me? Okay, I think we're having trouble there with this connection. Ajay Valimbe, let me bring you in here. Ajay, on your take on this, what you believe the ramifications will be of this circular, this new regulation?
I think there is nothing new, in fact, It just says that you can borrow and short sell the stocks, but now if you must reveal that. I mean, whenever you are trading, doing a short sell, you just have to reveal it. Now, it probably seems so. I think the Supreme Court Adani case, where SEBI had said that they will have to appropriate disclosures, and therefore, I believe when they are using word short squeezes, I mean, when too many people borrow and then short a stock. So I think in any case, it is not going to affect a majority of the 99% of the retailers or any of the general public. And because naked short selling was never allowed in any case. So you had to settle with delivery immediately on the same day in the short sell, and only thing you have to reveal it, nothing else.
But do you believe, Mr. Valimbe, that one of the main changes, of course, is the fact now that institutions need to mandatorily declare short sales?
Yes, they have to. You have to settle the delivery at the end of the day with the open position, and there are, otherwise big penalties.
Yeah.
So they can't. Yeah.
So no, that's what. So what will be the impact of that? Is that something that anyways was the order of the day, or do you believe now there will be a relook by institutions on these new measures?
No, I don't think so. Because anyhow they just have to reveal. They have to whenever they are using intraday, they have to reveal it, and they can do it. It is not going to affect.
Right. Ankit, is this connected with the recent Supreme Court order on the Adani Hindenburg row? Is that why the circular has come out? Is it directly related?
I completely agree. And trust me, if you talk about large institutional investor, the kind of scenario within India where the settlement happens within a day, they're actually not doing a short selling. Most of them are not doing a short selling for a day. They always use derivative positions the way Hindenburg has done it. They always use future and options, and that always happens in large stocks. So all the large stocks on the stock exchanges have FNOs. And only on those derivatives, these short sellings are being done by the institutional investor. So I do not see there's much change. Definitely SEBI wants to, after the Supreme Court judgment, wants to take a next action. So they came up with a reinforcing of whatever the rules were there with some tweaking which has happened. I don't see much of a mechanism change might happen unless a lending system starts in India. Because already for large caps, if somebody has to sell Reliance or Adani or HDFC or those, they won't do it through the delivery market. They all use derivatives for it if they're expecting the price will go down. And that is already allowed. Nobody is stopping you to do that. That was already allowed before. That is already allowed today, and that will all continue to be allowed tomorrow as well.
Okay.
And
One positive thing is now I think retailer will be able to know the stocks that are heavily shorted by institutional players. That is possible.
Yeah, that's there, but I differ because they do it through future options, derivatives.
Yeah. Futures options, yes.
Do the delivery-based selling. That happens more in US where the settlement period is 14 days. Our settlement period is T+1, which is expected to be same day by March. So how would I? So that is the institution don't sell it that they want to buy it the same day. They expect the price will go down in next 1 week, 2 weeks, or 1 month or 2 months. So when they have to do that, then they use the option of derivatives or future options. They would never use it for the.
I totally agree. Yeah.
Unless I have inside information where I know tomorrow about Reliance or SGFC something big happening on the board, then again it is banned. You have inside information. Where I know at 10 o'clock, that 11 o'clock, these results will become something bizarre.
I believe all these rules are still existing, and there was a master circular to that effect in 2007. I mean, it goes in 10, 12 years back. From that day onwards, that master circular is in place.
Yes. Ankit, what about your take on the institutional aspect, the institutions now needing to mandatorily declare?
So that's so what I'm trying to say. When institution, so that's definitely put a checkpoint on them. Yeah. So there are two points of it. One, they need to, and every day they need to declare what they are selling, what their short selling is. The second is the settlement will happen at a gross level. So that's a very good mechanism which has been reinforced here. So what does that mean is, till now, what used to happen, I shorted 10 o'clock in the morning, a Reliance stock, and by 3 o'clock I used to buy it back, right? And so I never used to give any delivery to my broker. But now it is told to me that if as an institution I'm selling it in the morning and buying it back in the morning, I still have to give the delivery in the morning or by end of the day and take back the delivery. So I need to arrange those stocks. So this will actually cut down the short selling which is happening on a delivery market. That might happen, or the second scenario is it might enhance the lending system in India, which is not very popular, where people who hold long-term stocks, they give it on a lending basis to earn some premium. And for the benefit of viewers, I can explain it further. How does SBL lending system experience for lending happens? I am a small investor. I have some 500 stocks of HDFC Bank. I don't intend to sell it, and I don't earn out of it. So there is a portal on NSE Stock Exchange. I can put it on a lending portal, and Ajay is there. Ajay wants to lend it for 2 months, so he will give me a premium of 5 rupees per stock, and with a promise that he will give me my shares back to me after 2 months. So that market might get matured out of this.
Yes.
Borrow and short sell.
Yes. Okay, Ajay Valimpe, your quick reaction to that, and then I'll get
I'm
Ajay
saying
Dua as
so
well.
that
I believe he's back with us. Yes, Ajay Valimpe.
Yeah, no, I was always there. So I'm saying it is nothing but you can borrow and short sell now. And which is very openly, I mean, you have to disclose it.
It happened with, if you remember, with Yes Bank in 2020, the biggest ever volume, which to my knowledge in last 3-4 years happened with the Yes Bank.
Yes.
People actually did do a lending and sold the Yes Bank stock.
Yes.
And the premium actually went pretty high, never at an unseen level.
Right.
Yes. Okay, let me bring in Ajay Dua. Ajay Dua, can you hear me now?
Yes, please.
Okay,
I can.
Ajay Dua, your first reading of this circular, this order, do you connect it with the recent Supreme Court verdict as well on the Adani Hindenburg matter? What do you believe will be the ramifications of this order?
I think the provocation is the Supreme Court judgment, and the fact that the Supreme Court itself has stated in the judgment that the government or the SEBI must look at the short selling, which has been short selling, which is the cause for all that happened to the Adani stock. It may be short selling in the US market and elsewhere, but how it happened, to look at Hindenburg's role under the existing laws, etc., has been mentioned by the Supreme Court in its judgment. So this certainly, that will be my first take. Second, I'd like to say, I totally agree with the experts who are on the ground handling the stocks, unlike me, that what they have stated is that there is certainly all that's to happen, that the law existed, the rules existed, they were in place, which kind of did not allow short selling the way it's happened, and that right now the SEBI's structure, the kind of instructions issued today are only reiterating the law which existed from 2007-8. So, having said that, I would say one or two add to that what my colleagues have already said. One, I think at the end of the day, the stock exchange being now required, all stock exchanges being required to indicate the number of stocks which have been, in which there is short selling, which has taken place by the institutions, has to be indicated. So that will bring about a greater, I would say, symmetrical information for the retail investors. It would help them because they know that in which stocks there has been short selling during the day. It may have been, as has been very rightly mentioned, the stocks which they hold or the stocks which they could access earlier through the lending process, but somehow or the other, that instrument or that avenue hadn't been explored. So right now it is possible that this particular reiteration of the rules might lead to the lending mechanism also being made greater use of. The fact of the matter, I think, is any requirement, disclosure requirement, in my view, always adds to fairness in the market, and in the long term, it is a highly beneficiary measure. So, they understate the importance of what has happened today. It may have been that the law existed, but by stating all these things explicitly, the regulators are going to be helpful to the stock exchange, to the retail investor in particular, as well as leading to greater volumes coming etc., going forward.
Yes. Also, it may be a reiteration, of course, of the earlier statements, Ajay Dua, and the earlier rulings that obviously short selling is not permitted, is not allowed, but it also is an urging to institutions to be more transparent, to also not indulge in this kind of profiteering at the which obviously will affect customers, consumers, which obviously will affect those investing in stocks in a adverse manner.
Uday, I just one other. I think today's these clarifications or reiterations have just made it clear that in all stocks which are traded in the Indian stock exchanges, short selling is permissible. Earlier, there wasn't that clarity there that in which of the stocks short selling was possible and where it is not. By stating this, I think that clarity has come about.
Uday, I want to add on this what Mr. Ajay said. I think we are missing one big point. We will not be able to stop what happened in the Hindenburg Adani case with reiterating these rules. Because whatever has happened is in a derivative market. One, the rules are not about the derivative market. The rules is only when it is happening on delivery. Any short selling at the time of derivatives will continue the same it can happen. So this ruling which is coming, or this circular which is coming, is no attrition or no prevention for those kind of scenarios which has happened. What happened in Hindenburg? Hindenburg in the month of January took a lot of positions where they are writing futures or options through various derivative instruments globally against the Adani stock, and which will continue to happen today also. If I and you want, we can actually start writing options and take positions on futures against any stock that it might fall, and we can continue to do that as far as we are meeting all the margin requirements of stock exchanges. So that won't stop. And even in that case, I'm not supposed to disclose. As far as I am giving up my margins, there is no disclosure requirements who is taking what positions in any stock. So any of these positions will continue to happen. I do not see this will help us to save those kind of scenarios. That is a complete, in my opinion, that is a miscommunication which we all are trying to give to each other. That's not going to stop. It does not say if I am taking a derivative positions that I need to report. And Hindenburg to do something like Hindenburg, nobody can do it in a delivery market. That all happened in a derivative positions. Because with less amount of money, you can play out a much bigger, larger numbers. And the kind of volumes you want to play in, those are only available in derivatives. They are not maybe available in the delivery market. So that can happen. It is not a saving if someone wants to do and play on those models again. And that is what I said yesterday. The only way now the government has to work is something coming, these kind of negative information which is false, that needs to be stopped. Something in a social media or a public domain, and somebody is starting pulling allegations which are not right. Their action has to be taken on those kind of things. Short selling, you won't be able to stop. Hindenburg, you won't be able to stop like this.
Frankly speaking, the F&O position, F&O thing, it is impossible to regulate. That is not possible only, even if government decides. So it would be too much. I mean, they cannot do it. And in case of order delivery, when there is a delivery, and here now as a SEBI is saying that institutional investors have to give a disclosure or have to disclose that they are doing this short sell position at when they are doing the transaction in the morning, and retail investors, they have to declare at the end of the trading session. So I don't know how it is going to benefit when retailer is going at the end of the day position, he is going to say that this is a short sell. And how they are going to yeah.
Also, Ankit, the fact is the Supreme Court had said that reports from external research groups, though, without any verification, should not be relied upon as proof. That will raise questions again on this entire matter, whether Hindenburg will be probed at all, who will probe the profits that were made because of reports like that. Supreme Court's tough words on this, will those have any bearing on action on ground?
That is the one thing which I say the same on your channel. The biggest question is how we we need to stop somebody planting false information in public domain for the public benefit. How we are going to stop it? And this is happening on a global panorama. And I'm repeating my example again, which I said on the channel 3 days back. If I want to put a report against Google or Microsoft, which is completely bizarre report, and put it on a public domain, and isn't it the companies will come after me, the government of US will come after me, government of India will come after me? That will happen. So why government of India should not go back and stop that? Why somebody in your country is putting a false information on public domain about India, about Indian companies? That's completely wrong.
Yes, absolutely. Ajay Dua, who will probe this? Such planted reports, yes.
I think the action has to be taken by the regulator of the jurisdiction where such a thing takes place. Now, the Indian SEBI cannot possibly be acting against Hindenburg if the action or the offense or the misdemeanor occurred in the US. Indian government has to necessarily, and the Indian regulator, has to necessarily make use of the authorities in the and vice versa. Merely because the stock is of a company of another jurisdiction does not give the regulator of that country a jurisdiction over that offense. It's something like what we are hearing about the Panun case, the offense against him being committed to US soil by a person who's not an Indian citizen, and in a third country in Europe he's been prosecuted. So the Supreme Court has yesterday itself said that we are not going to give him any relief. So exactly so, rightly so, because saying that the offense is not taken place on our soil and the gentleman is no longer an Indian citizen. So how do we have a jurisdiction over it? So I am just transporting that to the stock exchanges as well. If the short changing is against the rules, etc., sitting here in India, unless you first, as very rightly mentioned by Ankit and Ajay already, that the derivative market hasn't been included, so a large chunk of short selling takes place in that segment of the market rather than the delivery. That's absolutely a right point. Second, the Indian regulator has to depend upon the authorities of another country where the offense has taken.
All right. My thanks to all of our guests for joining us. We've run completely out of time.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.